How Bitcoin really works. To be profitable with Bitcoin, you have to know how it really works. So in this video, we will explain everything that is involved, including the underlying technology, which is blockchain. We're not going to go into a lot of technical detail about blockchain, so don't worry. But you do need to understand the principles of it. You connect to the blockchain community using a computer network. This network has Bitcoin ledgers using blockchain. All Bitcoin transactions are compiled into blocks, and then these blocks connect in a chain-like formation. This is where the name blockchain comes from. The Bitcoin process. If you want to make a Bitcoin transaction, then you will use your wallet to send out a request to all of the nodes, computers on the entire Bitcoin network. The nodes use special algorithms, a set of rules and calculations, which validate the Bitcoin transaction. Your Bitcoin transaction has to be verified and confirmed, and after this, it is combined with some other transactions to make a new data block and eventually a blockchain. All new blocks are added to the end of the blockchain. At this stage, the transaction is final and immutable. It usually takes between 10 minutes and 45 minutes to process a Bitcoin transaction. A Bitcoin transaction never happens immediately. There could be no changes to the transaction once it is finalized. The receiver of your Bitcoin transaction then sees this in their wallet. Bitcoin miners are essential. We have mentioned Bitcoin miners a couple of times in this training, and actually these people are very important. Why? Well, they are the keepers of the Bitcoin ledgers. If you think of a gold miner working tirelessly to find gold, Bitcoin miners are doing the same thing, trying to find scarce Bitcoins. The Bitcoin miners verify and confirm all Bitcoin transactions. They really are the lifeblood of the Bitcoin system. Without them, the whole thing would not work. There would be no new blocks created for the blockchain. This is why they are rewarded occasionally with valuable Bitcoins. If blocks are not added to the blockchain, then no Bitcoin transactions will be finalized. This means that not only will Bitcoin payments fail to be sent and received, but there will be no new Bitcoins created. Bitcoin miners know that there are only a limited number of Bitcoins available, and as time passes, they will all be competing for a dwindling number. They just leave their Bitcoin mining computers running 24 hours a day to keep verifying and confirming transactions and trying to earn those elusive Bitcoins. No trust required. The design of Bitcoin and the underlying blockchain technology is such that no trust is required. It uses heavy encryption techniques to keep everything safe, hence the name cryptocurrency. There is no need for human trust in the Bitcoin network because it operates on tried and tested computer algorithms. It is virtually impossible to cheat the Bitcoin network because it is a public environment. It would take a ton of computing power to break down all the encryption, even if that were possible. So, it makes more sense to use this kind of power to mine the Bitcoin network instead. Your identity is protected on the Bitcoin network. All of your Bitcoin transactions are verified using a private and public key. You use your private key as your digital signature in your Bitcoin transactions, and network users can verify this by using your public key. Both of these keys are encrypted, so you can only use a public key if the correct private key is used. Public and private keys are very important for you to understand as a cryptocurrency investor. A public key is tied to a public address where you can deposit cryptocurrencies. You can use your public address to broadcast so that you can receive payments from other peers. Your private key is not for sharing with anyone, as it is essentially the password to protect your funds. This private key links to your public key for added security. Your private key is how your balance is determined through the Bitcoin network. The public and private key system has two major advantages. One, it is virtually impossible for cybercriminals to steal your identity and make fraudulent transactions. Two, you can be completely anonymous on the Bitcoin network if that is useful for you. So now you know how Bitcoin really works. In the next video, we will look at the various ways that you can acquire Bitcoins. The lowdown on Bitcoin investing. The first thing that you need to know is that Bitcoin is volatile. The value of a single Bitcoin has gone up and down over the years. This is not particularly a bad thing, as other investments go up and down too. You need to be a smart investor with Bitcoin. Why does Bitcoin enjoy value jumps? So many people are reliant on the internet these days. People get very frustrated if they are out and about and cannot find a Wi-Fi connection to use the internet with their mobile devices. Whether this is a good or a bad thing is of no consequence when it comes to Bitcoin investing. The important thing is that the growing use of the internet is good for Bitcoin. Over the years since the launch of Bitcoin, it has attracted investors from all corners of the world. Being a true global digital currency that is available to all, in theory, it is no surprise that it has generated a lot of excitement. Another good reason why the value of Bitcoin has risen so rapidly is because it is a scarce resource that is actually useful. Most people know that there is only so much gold that we can mine. Each year, there is less and less gold left in the earth. Therefore, it has great value. You can apply the same logic to Bitcoin. There will only ever be 21 million Bitcoin. As time passes, this number will dwindle and the value increases. It is now very hard to mine Bitcoin, and this is only going to get tougher. Investors really like the fact that Bitcoin represents predictable and sound monetary policy that all can verify. At any time, you can see how many Bitcoins are in circulation and how many new ones have been created. You can easily trade Bitcoin for some products and services. If you have a gold investment, then this is not a liquid asset. You would have to sell some of your gold stock for cash before you could purchase anything. It is very easy to make cross-border transactions using Bitcoin. There are no governments or banks involved. You can send Bitcoin securely in minutes to anywhere in the world. Transaction fees are very low compared to fiat currency transactions. We really have the internet to thank for the rise in popularity and value of Bitcoin. The internet has made the sharing of information easy wherever you are, and this concept will underpin the success of Bitcoin as a global and verifiable currency. The price of Bitcoin. You will not find an official price for Bitcoin anywhere. It is not the same as fiat currencies. It is all about how much someone is willing to pay for a Bitcoin or fraction of a Bitcoin. A good reference for this price is the Bitcoin price index provided by CoinDesk, which you can find here. You will usually see the price as the estimate of the value of one Bitcoin. Most cryptocurrency exchanges will let you buy as many Bitcoins as you want and even offer fractions of Bitcoins for sale. When should you buy Bitcoins? There are no guarantees with any investments. The history of Bitcoin shows that it tends to increase in value really fast and then slow down and fall until it is stable. This is a cycle that you need to learn and understand. There are some great tools available that you can use to analyze the price history of Bitcoin. 1. CryptoWatch. 2. Bitcoin Wisdom. One thing about Bitcoin that it is really attractive to investors is that it is never affected by the financial stability of a country. So, if there is speculation that a major currency will fall, such as the UK pound with all of the Brexit issues, then if the currency devalues, this will have an impact on other world currencies. So, you need to think globally with Bitcoin. Don't just look at what is happening in the United States or Europe or China. How is the economy of the world changing? Go for long-term Bitcoin investment. You may have read that there are people making excellent short-term gains trading Bitcoin. While this may be true, you need expert knowledge and it is a risky strategy. We strongly recommend that you go for a long-term Bitcoin investment strategy. Here is why. If you invested $1,000 in Bitcoin in October 2017, 2 years later in October 2019, you have made a profit of more than $700, providing you with a return of investment of over 70%. That is a staggering return. Despite these kinds of returns being possible, you should still treat Bitcoin as a risky asset to invest in. If you are not prepared to take high-risk investments, then maybe Bitcoin is not for you. You have seen an example of the kind of rewards that are possible, so you need to decide if it is right for you. Bitcoin investment strategies. There are different ways that you can invest in Bitcoin. We will look at the most popular ways here. Long-term buying and holding. This is the Bitcoin investment strategy that we recommend. Here you will buy Bitcoin at a certain price and hold on to it for a period of time in the hope that the value will increase. You may also see this strategy called holding. When you decide to buy and hold, it is very important that you do not just take anyone's advice on whether Bitcoin will rise or fall. You need to know how Bitcoin works and do your homework using the tools available to come to a decision yourself. If you're going to adopt a buy and hold Bitcoin investment strategy, then we suggest that you do the following. 1. Do not invest more than you can comfortably afford to lose. As we said earlier, Bitcoin is a high-risk investment, and this should be in your thoughts at all times. 2. When you have purchased Bitcoins, don't leave them in an exchange wallet. Get your own wallet and move them there. We will discuss the different types of cryptocurrency wallet and their advantages and disadvantages in a later video. 3. Use a reputable exchange to make your Bitcoin purchases. This may cost you a bit more, but it is better to be safe than sorry. 4. Don't purchase all of your Bitcoins in just one trade. Use the principle of dollar cost averaging, DCA, and commit to purchasing a certain amount every month or more frequently throughout the course of the year. When you do this, you pay average prices during the year. Short-term Bitcoin trading. As we said before, this is where you buy Bitcoins at a low price and then sell them at a higher price to realize a profit. The time frame for these investments is short. We do not recommend that you start out with short-term Bitcoin trading. As you learn more about Bitcoin, you can move to a shorter-term trading strategy. It is certainly possible that there are some very large players in the Bitcoin market making profits regularly on short-term Bitcoin trades. You need to learn how to trade properly to make this work, which takes time and practice. Mining for Bitcoins. In order to make any kind of profit with Bitcoin mining, you need to invest in a lot of high-end computer equipment and get the cheapest electricity that you can find. And then there are no guarantees. Mining has become a lot harder over the years. There are less and less Bitcoins to find, and more people are mining. It is just not a cost-effective way to invest in Bitcoin in our opinion. Use the money you would spend on equipment and electricity to buy and hold Bitcoin instead. You may have heard for cloud mining for Bitcoin. The idea here is that you pay for a service that will mine on your behalf using the web. In our experience, these are either scams or so expensive an investment that you might as well just use the money to purchase your Bitcoins. Doubling your Bitcoins. Have you ever seen a website that claims that they can double your Bitcoin holdings? Or maybe you have come across sites that claim that they will pay you high levels of interest every day on your Bitcoins. We have one word for these kind of websites: scam. There are a lot of websites that offer high-yield investment programs, HYIP, and almost all of these are scams too. What happens here is that these sites take money from people all around the internet in exchange for high returns. They use the money they get from new people signing up to pay high returns to the initial investors, which creates a buzz. Then, guess what? A few months later, the website simply disappears. Most people lose their money, and they have no way to get it back. Don't fall for these Ponzi scheme type scams. You cannot double the number of Bitcoins that you have using these sites. It is more likely that you will lose all of your Bitcoins.